Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Tuesday morning and the cues coming out of global markets are fairly subdued given the fact that Wall Street was shut overnight on account of Labor Day, and Asian markets this morning looking fairly mixed with a negative bias. But of course, over the next 30 minutes, we'll be talking about the cues for trade, all the stocks in focus this morning, and of course, we'll also be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, send them in to us on our YouTube feed and we will take them up. But before we do all that, as usual, let's take a look at the top stories at this hour. Asian markets kickstart the day on the back foot ahead of the Australian Central Bank's rate decision. Wall Street, as I mentioned, was shut last night on account of Labor Day. Meanwhile, the GIFT Nifty is indicating a lower start for the Indian market. Oil prices remain volatile with the Brent holding near that $89 per barrel mark. Optimism over China's measures to boost its property market fades even as the market assesses expectations of major producers extending output cuts. On the show, we put the spotlight on Hero MotoCorp as it invests 550 crore rupee more in Ether Energy, and Cipla as it makes a new acquisition, and also amid reports that Bain and Dr. Reddy's may team up for a joint bid to buy the promoter's stake in the drug maker. Well, let me first bring on board our technical expert for today. Joining me is Sacchitanand Uttekar of TradeBulls Securities. Good morning, Sacchitanand. First and foremost, what do you make of the kind of rally that we saw on Dalal Street over the last two sessions above that 19,500 mark? Would you say a crucial support level has been breached and that we are back on the trail for 20,000 now?
Good morning, Nandita. Certainly, yes. The market seems, turning around. After 5 weeks of a declining trend, last week we saw some stability near that 19,200, 19,300 zone. And I think the base looks very firm. So if you look at the monthly structure itself, despite of this particular decline, the Nifty never slipped below its 5-month exponential moving average, which is somewhere close to around 19,165 right now. So unless we don't see any slippages below this particular level, I think the entire trend structure still remains bullish. After almost 2 weeks of consistent supply pressure near to that 19,500, yesterday we saw the index closing on a confident low above it. Now, if you look at the entire data set, it purely looks like short covering, and probably one more day on the bullish side above 19,600, and we may see very firm directional momentum play getting activated in the market. So clearly the bias remains bullish. The base looks very firm at 19,300, and in fact, during the day, even if we get any declines or slippages towards 19,460, 500, that particular range should be utilized to build in long positions. On the higher side, we are expecting that this particular rally could continue towards 19,600 initially. And once that breakout is established about 19,600, we may see a very clean move towards 20,000. So yes, we are anticipating that the floor is well set for a very strong directional momentum play towards 20,000 levels.
All right, that's the view then, on trail for the 20,000 mark once again. With that, Sacchitanand, hold that thought. We'll come back to you and talk about specific stocks. But let me also bring on board Aditya Welekar, who's the Senior Research Analyst at Axis Securities, who's joining in to discuss what's happening in the metal space, given the kind of rally that we have seen over the last few sessions. Good morning, Aditya. Great to have you on the show. First and foremost, let me tell us, what do you make of this rally that is playing out in the metal stocks, given the fact that, there are some measures taken by China to boost its, property sector. Do you think that is enough to revive demand for metals for the long term, or do you think this is just a short-term move in metals?
Yeah, good morning. So I guess the recent underperformance of the metal sector, if you see the past few months, so now the setup of the market was such that China was going into deflation. China's PPI, CPI was in the negative zone, and its property sector was not doing well. So the entire expectation of the investor community was that China will go for some kind of stimulus, and that has happened actually. And they have started trickling in several short-term measures, some long-term measures. So, for example, they have started reducing their LPR, that is loan prime rate. They have taken some measures towards cutting down their mortgage rates, and then forex reserve requirement rates for the banks. So they have started supporting their currency. They have started supporting their property market by cutting down the mortgage rates and even the interest rates negotiations for the first time bias. So all these things indicates that China is now aware that they have to prop up the property sector, and because of these measures, the sector which has already bottomed out, it has found some support, and the stocks which were well languishing in the lower zone, they have started. They found support, and the market taken these measures from Chinese economy, Chinese stimulus in a positive way.
Right. Let's talk about specific stocks like Tata Steel, which is at a 52-week high now. Now, reports were suggesting that it is in talks with the British government to secure funding for its ailing Port Talbot plant. It had recently warned of uncertainty, with respect to the future of its British business. So, if this funding comes through, do you think this will remove a key overhang for the stock going forward?
Yes. But the terms of the funding, that fine print we will have to see, means how much capital from the parent Tata Steel India goes to fund for Tata Steel Europe. So that will be one key watch point. But overall, if you see for Tata Steel, they are expanding at their Indian operations to a very large extent. So from 20 million ton capacity to 40 million ton, they are targeting at Indian operation itself, and their next capacity of 5 million ton at Kalinganagar is coming online by FY26. So if you look at it on an overall basis, the scale of Indian operations, the footprint of Indian operations is becoming quite large, and as compared to Europe, the size of Indian operations, if it increases, and Indian operations being at a good EBITDA per ton level, so overall, the European operations become slightly insignificant. So if we monitor the key near-term funding concerns, overall in the medium term, maybe in the long term, Tata Steel remains well placed. So we suggest that the people who have invested in the stock should stay invested, but post this recent 2 days rally, fresh long positions might be slightly tricky because we have to see the near-term triggers, the volatility, what news comes out from the UK funding.
Right, that's the view on Tata Steel. But what about, after the kind of run-up that we have seen recently, but you've mentioned that most of these stocks have bottomed out now. From a valuation standpoint, would you say that, some of these stocks are looking attractive now? Or do you think, valuations are getting fairly expensive?
Yeah, so the valuation bottomed out these fiscal stimulus measures started trickling in. So this was a situation, say, 2 months back, 1 month back, or maybe last quarter. But now the rally in the stock since last 1 week, or maybe specifically if you see last couple of days, the stocks have rallied quite substantially. It means 10% the stocks are up. So current level, the valuation looks slightly unappealing. So if you see the valuations on a price to book basis, the stocks are factoring in a mid-cycle valuation. So on a long-term base, the stocks are trading above their long-term averages on a price to book basis. So valuations are not very attractive at this point of time. But as I said, the people who have already invested in those stocks, they can stay long and continue to hold their positions because we may expect some further trickling down of stimulus news coming from China, and that will have further support to the steel prices and overall sentiments. So people who have already in a long position, they can continue to hold, but fresh long positions maybe is a slight concern. Maybe we can expect if the market corrects and if the stock we get some lower level, then buy on drips kind of strategy we suggest.
All right, buy on dips is the strategy that, looks prudent at the current juncture. But lastly, within the metals pack, would you prefer ferrous metals now or non-ferrous metals? Which one would you pick?
So, see, if you see in the non-ferrous space, we have Hindalco and Nalco as a pure play aluminum companies. And our view is positive on Hindalco. So, that is one of our top picks in the non-ferrous space. So ferrous names have already rallied a bit and the valuations are not very attractive. So in the mid to long term, we are more comfortable with Hindalco. because it has a one decarbonization theme. Aluminium has one that is one of the theme which will play out, and the aluminium prices are not yet to a level. The prices are still down, and there is a scope for prices to rise once the demand starts reviving and demand comes online in Europe and US. So currently the demand scenario is not very healthy because of the interest rate cuts and all. But given the automobile EV manufacturing shifts and then overall decarbonization theme in the medium to long term, we see aluminium slightly more attractive than steel. And Hindalco's valuations are also not very expensive at this current level, even after this 2 days rally. So we prefer non-ferrous at this point of time as compared to steel.
All right, that's the view on the metal pack. Prefer non-ferrous at the current juncture because steel stocks have run up quite a bit in recent times. With that, Aditya, thanks a lot for taking out time and joining in. It was a pleasure speaking to you.
Thank you.
Well, let's go back to Sacchitanand then and talk about specific stocks. Let me first talk about the stock of the day, Cipla. It has made an acquisition. In fact, Cipla MedPro South Africa has acquired Actor Holdings for somewhere around $48.5 million. In fact, there are reports also that suggest that PE giant Bain may have dialed Dr. Reddy's to team up and, in fact, bid for the promoter stake as well. Remember, Torrent is the only company that may have submitted a non-binding bid for the promoter stake in Cipla. And now there are reports that Bain and Dr. Reddy's may team up for the same as well. And if DRL participates, this combined entity will become the leading pharma giant in both at home in the US as well as in emerging markets as well. This is, of course, a report-based story, and the stock may be reacting to it today. But if you look at Cipla, over the last 5 sessions, it hasn't really done much. Even Dr. Reddy's down 2% or thereabouts over the last 5 sessions. On the charts, Sacchitanand, how would you play these two stocks now?
Nandita, both the structures are still bullish, but if you look at Cipla, consistently we have seen that 1270, 1300 zone has been a supply pressure for this counter. Even if you look at its RSI, since last 2 months, we are seeing a negative divergence getting displayed. So I think it's better to chase momentum once the stock starts trending above this supply zone of around 1270. In case we see this breakout shaping up in a day or so, probably we may see an extension of this particular move towards 1350 quickly. So the bias for Cipla remains positive, but it's better to trade once the breakout is quite evident. One can place the stop losses somewhere close to around 1220 on a closing basis. When we look at Dr. Reddy, we've already seen a decent correction from its recent swing high. Even here, that 5900, 5980, 6000 level was acting as a supply zone. And from there, we have seen this particular decline. Now, even here, the kind of correction that we have seen probably looks stabilizing, and the floor is very well set at around 5600. So in case we see Dr. Reddy's, trending about this 5700 mark, we may see a very good quick rally towards 5900. So I think both the counters can be accumulated. The first choice would be Dr. Reddy's since the decline has happened recently. But when it comes to Cipla, it is better to chase momentum once the breakout at around 1275, 1280 is evident.
All right, that's the view on Cipla and Dr. Reddy's. But let's also talk about the brokerage call of the day. We have a couple of initiations coming in on Raymond this morning. Jefferies has initiated with a buy rating, target price at 2,600 per share. It believes that the company has addressed the past investor concerns on debt and corporate structure, and the company is already net cash and is set to list its lifestyle and real estate business separately. In fact, growth focus is visible across businesses and led by capacity expansion and market share gains as well. And the brokerage expects earnings, to grow at somewhere around 13% to 24% CAGR over FY23 and FY26. Motilal Oswal Financial Services has also initiated a buy rating, target price at 2,600 per share, and it believes that rebranding, legacy with financial discipline and demerger and promoters capital infusion are key drivers for going forward. In fact, bullish calls coming in on Raymond there, but the stock hasn't really participated at a time when the Nifty and frontline stocks have gained substantially. The stock is below that 2000 mark, and the brokerages have targets above that level. So would you say that it's time to buy on dips when it comes to Raymond?
Nandita rightly said, I think the price action has not been really significant. We have seen a very subdued a trending move, a very gradual one, in fact. And if you look at the monthly and the weekly RSI, both are trending in their extreme overbought zone. So I think, it's better to be cautious here, let the decline shape up, and then probably one can, start the accumulate strategy. But as of now, I think, the supply pressure at around 2000 is very evident. In case if the stock starts trending below 1930 from here on, then probably we may see a sizable correction in this particular counter towards 1800. So as of now, I think it's better to avoid the counter, but on a decline towards 1800 could be a good opportunity.
All right, decline towards 1800 could be a good buying opportunity for Raymond, but at the current juncture, avoid it. That's the call coming in from Sacchitanand. But let's take up a few queries that are coming in this morning. I want to take up some queries on the railway stocks, IRFC, RVNL. Do you think it's a good time to buy into this counter after the kind of run up these stocks have seen? I think Vivek Kurup wants to know whether or not it's a good time to invest in IRFC and RVNL for 1 to 2 weeks going forward.
Well, from this particular pack, one particular counter that we are, going ahead with a very strong bias is IRCTC. We have recently added this particular counter to our portfolios, and we are expecting that this particular rally, which has ejected at around 660, could eventually, turn towards 830, and we may see a swing towards 900. So there's a good, strong potential still left in the counter. On a declines towards 680, 685, we still advise building long positions. And if you look at the weekly, monthly structure, until unless the stocks continues to trend above 660, the entire structure remains bullish. When it comes to IRFC, we have already seen a very strong momentum play getting ejected, getting reinstated here. And if you look at the entire price structure, it looks like a bullish flag on the weekly scale with a price target somewhere close to around 75. So in case if he is holding on to existing long positions, then probably he can keep a trailing stop loss somewhere close to around 61.50 on a closing basis and review his position at around 75.
All right, that's the view on the railway stocks. But let's take up a query on Aarti Industries coming in from Nitin Limai. Wants to know your thoughts on this stock. But, if you look at this stock, over the last 1 month, it has been trying to stage a comeback. Has cleared the 500 rupee mark and just come off its 52-week lows. Should one look at this as a trading bet now, or time to avoid?
The structure looks interesting. We have already seen a low top, low bottom formation sequence, which has been going on for almost 1.5 years now. And if you look at the recent development on the weekly scale, we have a positive divergence on its weekly RSI. Plus, the sequence from April on the declining side is shaping up in the form of a falling wedge formation. The stock is now comfortably trending above its 5-week exponential moving average, which is currently placed at around 480. So I think it's a good idea to chase momentum here. We've already seen a good bullish flag formation on the daily scale. The pattern is indicating a swing towards 540. So I think from a trading perspective, he can keep a stop loss somewhere close to around 480 on a closing basis and add on to his long positions for an immediate move towards 540.
Right, that's the view on Aarti Industries. Hope that answers your query. Let's take up a query on IOC. This one is coming in from Parth Chaudhary. Wants to know your thoughts on this stock. Of course, OMCs have been a little bit under pressure given the fact that we've seen a resurgence in crude prices, and there was the whole issue of LPG subsidy as well in the middle when we saw some bit of correction. But within the OMC basket, how is IOC placed now? Stock is somewhere around 90 rupees, 10 odd bucks away from the 52-week highs.
Still not comfortable. In fact, we were anticipating that there could be a floor somewhere closer on 92, but even that particular floor has been breached. The low top low bottom sequence or the bearish sequence still continues, and there's a good chance that the stock may slip towards its 200 days exponential moving average, which is placed somewhere close to around 86. So as of now, the structure looks weak. The 92 support is now turned into a resistance, and unless we don't see a swing closing above this particular level, the chances of revival in the current trend looks bleak. We may see further slippages towards 85.
Right, that's the view. Not too encouraging there on IOC, but let's talk about the KNR construction. We have a query coming in on this stock from Hemant. Good time to invest in this stock, Sacchitanand. The stock was up somewhere around 0.5% yesterday, and over the last 1 month or so, it has given returns of 14% or thereabouts.
Well, the price is evolving very well. In fact, it has registered a breakout from a consolidation last month, and the kind of a move that we are witnessing right now looks like a continuation formation. So we may see a move towards 310, 320 zone eventually, and that's why I think it will be a good idea to participate in this particular bullish trend. The structure will only be violated in case the stock starts trending below 255. So from a positional perspective, you can keep a stop loss at 250 on a weekly closing basis and accumulate this particular counter for a move towards 320.
Right. Before I take up any more queries, I want to get in your thoughts on a Hero Moto. Yesterday, it did make a comeback of sorts, 0.7% gains coming in. And there is news flow around the counter, given the fact that the company will be, investing 550 crore rupee more in its associate company, Ather Energy. In fact, its shareholding in Ather Energy will increase post this investment, and currently it holds somewhere around 33% stake in Ather. Given the fact that Hero has clocked in an okayish recovery ever since that whole ED raid thing played out, would you say that it's time to look at this stock in the two-wheeler space?
Yes, Nandita, I think the price action has been very stable at around 2900, 2950 kind of a zone. And yesterday we saw some short covering, data getting shaped up. The stock has already started, trending above its 5 and 20-day exponential moving average, but its RSI has still not moved above that 50 zone. So probably, breakout above 3000, and we could see a turnaround in this particular, price pattern itself. The low top, low bottom structure could change into a high top, high bottom sequence soon. And I think the floor is well set. So probably, one can depend on that 2900 support and start accumulating this particular counter. From a long-term perspective, we may see, a bit of a consolidation within the 3300, 3000 mark. But eventually, we are anticipating that the stock could, rise again towards that 3600 mark. So it's a good time to accumulate this particular counter, keeping in mind 2900 as a very strong support.
All right, two more queries to go, given the fact that we are running out of time. But first one on Aavas Financial. This one is coming, financiers, I beg your pardon, coming in from Tarun Singh. And the second one, IDFC First Bank, coming in from Harshal. IDFC First Bank, we saw a good rally coming in, given the fact that GQG has bought a stake in this counter. And Aavas Financiers trying to make a comeback after hitting 52-week lows. In fact, for the last 1 month, it has given positive returns. So thoughts on these two stocks?
Well, IDFC First Bank clearly remains an outperformer. The floor is again, elevated at around 90. And if you look at the monthly setup, it is still trending comfortably within its overbought kind of a territory. With the RSI somewhere close to around 86, I don't have the courage to, give recommendations of fresh long positions. But certainly, if someone is holding on to the counter, he can keep a trailing stop loss somewhere close to around 89, and continue to chase this particular momentum towards 100 to 105. But when we look at Aavas Financials, the stock is still struggling. It has been trending below its 200-day exponential moving average. Even right now, the kind of consolidation breakout that has been displayed doesn't look, that confident. we may see this particular rally getting fizzled out somewhere close to around 1700. So I think it's better to remain cautious. Any slippages below 1580 from here on could again push the counter lower towards 1400. So I think the lower top, low bottom sequence or the bearish trend continues in Awas. 1700 looks like a supply zone.
All right, that's the view on these two stocks. But with that, we've come to the end of the query segment, given the fact that we are running out of time. But before I let you go, Sacchitanand, what are your stock recommendations for viewers this morning?
Nandita, we saw a very strong participation from the cement counters yesterday, and Ultratech has been trending near its life high levels. If you look at the weekly setup, we have seen a 13-week consolidation getting mature, and the breakout was very evident in yesterday's price action. Now, despite of the rally, we believe that there is still scope for a further extended up move towards 88.40, and that's why we are advising building long positions here when it comes to Ultratech Cement. The stop loss should be placed at around 85.20 on a closing basis. We're expecting this particular move to shape up, during this particular week itself. It's a buy on Ultratech Cement. The other stock which has hit our radar is Canara Bank. Now, again, even here, we have seen a vertical rally in the last two trading sessions. This looks primarily like a V formation, on the daily scale, exhibiting a price target somewhere close to around 355. So we are recommending, building long positions here. From a trading perspective, the stop loss should be placed at around 334.50.
All right, two buy calls coming in, one on Ultratech Cement and the other one on Canara Bank. With that, Sacchitanand, thanks a lot for taking our time and joining in and addressing all of your queries as well. It's a pleasure speaking to you as always.
Thank you.
But with that, we've come to the end of this edition of Morning Trade. But before I go, there's a new listing today. Vishnu Prakash will be making its debut on the bourses. Final issue price was somewhere around 99 rupees per share, and experts believe that it could see a 50% listing pop. So watch out for that one in trade today. It lists at 10 a.m. With that, it's a wrap from me. Thanks a lot for watching. But of course, from the entire team and me, thanks a lot for tuning in. But stay tuned, because coming up next is Opening Bell.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Money Control is bullish on India. Join the campaign. Tweet to us with #MC Bullish on India.